on, everybody? Welcome to the Trading Market Technicals morning call video for Wednesday, January the 8th. So we did get that move higher. Dow Jones up 105, Nasdaq up 39.5, S&P up 11, and the Russell up about 10.5 points. And that was basically a 3-day kind of a pullback at the beginning of the year, and so we actually pushed higher, and now we're beginning to get hang out at these upper end of the ranges where the E-mini S&P all-time high was 1846.50, and in the overnight session we're just kind of hovering around basically on the flat line to down a point and a half. So where do we go from here? I am looking for another push higher, maybe today, and then tomorrow we have ADP numbers and the non-farm payroll numbers, which anything could happen, as we all know, on non-farm payroll day. So we got to keep it light, and we're just at the early stages of the new year, obviously. So let's keep an eye on some key sectors. And what I'm doing today is, and moving forward, is I'm going to spotlight a few sectors to help you with some trade ideas to get involved in, as the days progress. Okay, so I have about 300-400 stocks on my watch list, and a bunch of ETFs that I watch and I dial down into. So going forward, my main spotlight of sectors for 2014 are going to be the solars, banks, home builders, tech, retail, and then of course commodities are going to be gold and oil. And I follow them very, very closely, and as soon as I see opportunity, of course I will point that out to you in the morning call video. I want to go over some banks and some home builders that I do like and that I am watching when markets do pull back, and or the stocks itself. So I want to get right into the charts. As far as indicators today, really not much has changed. I'm not going to bore you with the same monotonous patterns, but remember, in technical analysis, pattern repetition is actually very important, so it can be quite boring sometimes. But okay, so let's go right into the charts. As you see, you've seen this before, the E-mini S&P monthly chart. We are at a major extension. Okay, logical place for a pullback here to the 8 EMA, even back up to this area here to 1600, and the market would still be in an uptrend, and it's now on a monthly chart. Okay, so I just wanted to show you that we are extension. That's why I always like to use caution at these major extensions. Now, in a daily chart, as you can see here, I pointed this out on Monday that we have a bullish fallen wedge or a bull flag, whatever you like to call it, and we broke out of that bull flag, okay, or wedge pattern. Now we're down about 1.25 in the morning session here, which is nothing. So we are now outside of this wedge. So I do see the markets, or at least can, get up to this area into the 1835, 1845 area here, at least to challenge the highs. Do I think we take out the highs? I mean, look, anything is possible. I do see the market's very tired. Watching chart patterns all day, I see that the markets are getting a little bit expanded, tired, if you will. So that to me, and when I see price that we pop up and then we kind of just roll or just fade into a consolidation the rest of the day and no movement, tells me that buyers are getting a little exhausted at these upper end of the ranges. And relatively speaking, I mean, you could see why. So just, keep that, always put that in the back of your mind. Even when you're day trading, you had a big gap up yesterday, which really kills the day trade most of the time, unless you get a good market gap up, and then stocks, or at least a stock that you're looking at, gets a good fade at least back to the opening range where you can pick it up, and then you have some continued buying. That's the ideal situation. But the market's gap up and sells off, and then kind of fades, very little shallow pullback, and then sits there sideways all day. That's not what you want to see, obviously, and that's what's happening with a lot of the stocks. So, and it's been happening for months now. So this is why we have some continued follow through of price action, what's happening, but things are going to open up. I could see it happening in the forex markets, and it definitely will follow through into the equity markets. And I do see a pullback in the cards. How deep, nobody knows until the pullback starts to occur, and where we can monitor it and see where price and volume actually takes us. Okay, now let's go take a look at the daily, the 1 hour chart. And here are my lines. Here are my main support lines that I'm looking at. The bottom line is 1820 on a closing basis. If we lose 1820 closing basis, stops are going to be tons of stops where buyers are bought up here. Logical spot. You could see it, and I could see it in a price action where every time there's gets down to the 1820, boom, we pop. Get anywhere close to we pop. Now we sold off, buyers stepped in again. So a lot of stops in here, but on a closing basis, if you close below the 1820 and then we get a little follow through the next day, all of those stops will get elected, and it's just going to set a chain reaction for more selling to come. Now, 1812 would be a good area, and then of course the round lot number of 1800 would be your next real big target area. That is if we start to pull back, and this is where I'm going to be leaving these support lines here. Very important to look at. Now, if we take out, excuse me, that 1835 area here, and this is a small, very small little area of support, then I think we can challenge the highs. At least challenge the highs. I don't think that we're going to continue. But again, anything can happen in this crazy market. So here's the first area of resistance, and I think it's going to be decent resistance too as well. But if we get up here, then I think we have a good shot of at least maybe even break through, make new highs, and then fail again. So we'll see. Let's take it one step at a time. But again, a lot of big news, economic data coming out in the next couple of days, as well as we have earnings coming out. So we're going to get very active here in the next few weeks. Earnings, I believe Alcoa kicks it off on Thursday. So just, keep that in mind as well. So there's going to be some pent-up volatility, and I can't wait for that to happen. Okay, let's run through the indices first. Spiders. We have the 20-day moving average. As you can see, we basically really didn't do too much on the spiders. S&P was up 11, so I think spiders didn't really, I think, up 50, 60 cents. But if you see here, we still really have an inside day above the 8. And again, if you look at the pattern recognition, we're staying above the 20, which is bullish, which tells me, that's why I said, we had that down day Monday and Tuesday, and that's why I said, you know what, we're still above the 20. That's why I think we can take a little shot and at least pop up high. Remember, news does trump the charts, so ADP, non-farm payroll could fail, and we can even move lower and or higher. So really, anything goes in the next on Thursday and Friday. So just keep in mind. But again, most of the price action, yes, gets skewed, but generally goes back to the direction of where that stock or indice or sector was prior to that announcement. Okay, so let's take a look at the Dow Jones. As you can see here, holding up relatively well again. Dow up 105 points, so and it's hanging at the upper end range. So to me, I think we could at least challenge the highs or even make new highs in the Dow Jones. Now, transports, little weaker, and it's surprising. What's surprising me is that crude oil really took a bath the last week, and the transports really didn't ignite. Now, that's interesting. Okay, that's something that we want to really keep an eye on too as well, because of the fact is when you have crude oil selling off and transports not, to me that might be a little hint of something to come. Here's the IWMs, another one of our leaders, and as you can see here, inside day from the previous day. We've actually had an inside week so far, okay, actually from Friday. So we had Monday, Tuesday, Wednesday, and we've had an inside week. So we really need to get beyond this range of 115 to 113. As you can see, the Bollinger Bands are still wide. They're still contracting. So it needs a little bit more basing to see what happens here in the next couple of days. Here's the Qs. And then now technology is starting to, you can see they're starting to move in the Bollinger Bands here. And again, all of the indices that we follow are above the 20-day moving average, again, which is bullish. Now, the Qs did have an outside day yesterday. So I would expect continued prices to move higher again. Amazon reprieved up a little bit. It was down in the last couple of days, and yesterday had a decent day up. Apple actually had a decent day up as well. So some of the larger cap techs, Google, actually turned around and started to move higher again. So again, I'm looking for another good day in the markets to at least rally again, and then we'll reevaluate the next couple of days. Okay, now let's get into our sectors. Now, first let's talk about gold and oil. Now, the GLD, I see continued weakness in GLD, and I am looking for a big flush lower in GLD. I like gold. Gold's down about 4 right now, 1225.50 in the gold futures contract, the GC contract. I think it just really can't get any muster for any type of rally. Now, remember, we did it's a tricky spot here because we did break out this bearish symmetry, as you can see. Now we're outside of it. So logically, you can see this candle here on Monday. We actually tested that right to the penny, and yesterday just kind of consolidated. Now this could go any type. Now I'd like to see this, if we're all going to move higher, maybe break the 50 and fail. If it can break the 50 and turn around and fail, that's when I would look forward to put on a short for a big flush lower. Now, if it just continues to consolidate, it's basically anybody's guess. So, and I wouldn't want anybody to go out and look to buy it or short it here. I think we see lower prices before we actually get a real good rip your face off short covering rally. But I do think that if we can get back up in here, like a weak bounce in here, and then the next day in the morning, maybe gold starts to sell off, I'd rather do that than carry a short position overnight, because you really don't know what could happen in the overnight sessions. It's kind of whippy. As you can see, the chart is just horrible. All these gap up, gap downs. I mean, it really is a horrible chart because it follows the continuous future contract. So you're always going to have a gap up, gap down day unless gold does nothing in the overnight session like it did here. Okay, so I do like gold lower first before we look to buy it. I wouldn't buy it at these areas. I like to take out this area here, and then you're probably looking at somewhere around probably 110 to 105, maybe 108 area in that zone here. But at the moment, again, no trade in that. I'm looking for either a pop, a dead cat bounce into that 50 for a short, or a big flush, and then look to buy, start accumulating gold somewhere around 1,000 to 1,100 area. Okay, USO continues to break down. Now, as you see, we had a big move lower. We had a break out of bearish symmetry. As you can see, the 20-day moving average broke back out, and then we broke this consolidation area, and then we consolidated and ran up higher. And now we sold back down again. So now crude oil is back in bearish symmetry mode now. So I wouldn't touch this. I wouldn't even look to pick a bottom yet. It needs a lot of work. Look, the bottom line is if it can flush again and get back down to these areas here, then I would like to see USO. Now this is the USO ETF, but I like to see crude oil USO back in here, and it could base a little bit and hold. Then I would be again looking for a spot. But I'm stalking crude oil for another trade. Here's the networking sector. As you know, we validated it, broke lower, and then continued sideways. Now broke out higher again. So this actually would get you stopped out in the head and shoulders pattern. Now here's the networking of the technology, looking really good, like I said. So I'm thinking tech continues to move higher for at least a few more days here. Okay. Now let's look at the home builders. One of my favorites is Lennar, L-E-N. We took a trade, I think back in the, we spoke about it back in December, last couple of weeks, I think mid-December. We had that breakout. Most of these patterns are repetitive. As you can see, we have a symmetrical triangle. When I show you the other charts, they're all basic symmetric triangles. I do like Lennar. This has a little bit more juice to the upside. When it does go, it actually moves faster than the other builders. But Lennar is one of my favorites, as you can see here. But let's take a look at Toll Brothers. Same thing. Toll Brothers a little more whippier than Lennar as far as trading price action. So I like Toll Brothers, but I'd rather stay away. I'd rather buy Lennar. PHM is another one I like here. As you can see, we have higher highs and higher lows, right? We have a symmetrical triangle. We broke out of it, and now we're back testing it. So maybe another 2-3 days, maybe getting back up to here. I'd like to see it make a higher low and kind of stop right at the 20-day moving average. So let's see what happens here. Maybe we might get into some of the home builders. We start legging into a trade in the PHM. But PHM, Lennar is two of my favorites, and KBH. Well, why KBH? Well, this hasn't really gone yet. And if you see, we do have a symmetrical triangle as well. But this has been basing much longer than the other home builders. And this actually broke out, but hasn't really shot up. Now, there could be a seller, a big seller, just getting out of a trade, holding this thing down. Or it just could be a lack of interest in the KBH sector. Or obviously it could be something wrong fundamentally. But as a technician, you want to watch a break above 1840 because it has plenty of room to run. Why? Well, look at the thin zone that it has in here. So once this takes this area out, you have a volume pocket here of just pure emptiness, which for a bull is what you want to see. So 1850 on a break and close, I think you have a great opportunity to get long this KBH. with a stop below right underneath the 50-day moving average. So I love, this is one of my favorites right here. Okay, but this might take some time. All right, you don't want to just go in and buy it. Wait for the breakout, wait for confirmation, and then look to get in it. And this probably would take you way back into this area here. We'll do a Fibonacci retracement from high to low, and then we'll see where we go from there. XHB is just the home building ETF. I want to show you. One of the things that I like to do is I like to scan ETFs and see either weakness or strength, and depending on what I'm looking to do, dial down the top 10 holdings and then look for the best chart. Really is the simplest form that you can do to find some good trade ideas. Okay, so XHB, here's the ETF. Now, I'd rather go to the stock than XHB doesn't really move too well. Okay, and you can even buy options on this. They have low volatility on all of the ETFs, or most of them anyway. Okay, here's the XLF. Now, as far as this, another sector I do like. It needs a little bit more of a pullback, but XLF, as you can see, the ETF, the bank and financial ETFs, way above the 20. If it could get back to at least the 20, maybe back up to this area here to the 50, this is going to be my interest in looking for the banks again. Some of the areas that I do like, as far as Citibank is one of them. Right now, I'd like to see it come back in again. As you can see, another symmetrical breakout, right? They usually follow the same. It's based on home sector, you know, banks, financials, home builders. But if you see here, we had a nice big break. Now let's see if we can get back down and make a higher low from here. Easy to manage, easy to get into. But Citibank, I wouldn't get into any of these right now. As you can see, the Bollinger Bands are extended. We need to see it get back to at least some sort of a lower high. A higher low from this area here. All right, so and here's your pivotal low that you're going to really, that's going to be your stop area after this pullback. It's met. This little stop, this below that tail is really where you want to manage your stops. Okay. Next is JP Morgan. Again, we call this on the break here in late November, early December. Flag, we call another breakout here. We moved higher. Now, again, above the 20, I do like JP Morgan as well. Again, coming into some headline risk, but I'd stay away from it at the moment. A little bit stretched. I'd like to see it come in and break below this area here. Okay? And Goldman Sachs, what can you say about Goldman? Goldman actually now is just way overextended. To me, needs a lot of work to pull back. So there's better opportunities than Goldman Sachs. Okay, and then lastly is Apple. As you can see, Apple had a downgrade. We had a big pop up, and then now we just have an inside day. So let's see where Apple goes. This could be actually creating a bear flag here. So I wouldn't really touch this to the long side. As you can see, we can really be just kind of making a flag here, and then here's your flagpole. So I think you see 520. And then, again, anywhere in that 520 area, if it could base for a couple days, I think it'd be a good opportunity to take an objective long position with your stops below here. Okay, and right now I wouldn't touch it, though. It looks like, to me, it broke this bullish uptrend from higher highs and higher lows, and now we broke back below it. We're below the 20 for a few days now, and now we're clinging to the 50. So I think you see some further downside before we move higher. All right, guys, a little bit long, but I wanted to just get a few things out to you guys and try to get some opportunity out there. Have a great day, and we will speak to you tomorrow.